tonight we have a problem of our own here in Ghana. It's got to do with the currency, the local currency, the cedi. Now, Ghana's stocks are said to be the worst performers in the first quarter of this year as foreign investors exit the local bond market because of the depreciating cedi. According to Bloomberg, the Ghana Stock Exchange Composite Index has lost 14% this year. We will analyze that in a bit, but first, Finance Minister Ken Ofori-Atta has been reacting to news that local or foreign investors are exiting the local bond market. He says it's rather good news for the economy.
Truly do not want excessive participation in the local market. I think it was, we might have inherited somewhere 38% and maybe it's come down to 28% or so. So in a flip way, I think that's a very positive statement because you don't want too much reliance on foreign participation in that. Yeah.
Don't you think the rate at which they are, if they are even exiting from the local bonds, it's not good for the economy? And what are you not telling them? You've convinced them to participate in the Eurobond. Why are we not seeing the same interest in the local bond? What are you going to tell them? Because some have argued that that is contributing to the city's depreciation.
They have argued that, and the central bank governor has told us that, you know, this is all speculative issues, and he's comfortable with where the rates are. So I think, you know, those who need to stay will stay, and we are comfortable with that. We met quite a number of them on the roadshow, and I don't see the pessimism that is being shown.
The finance minister expressing some optimism there, but that is not reflective on the stock market. I mean, based on what we are seeing. Let's speak to stock market analyst Bertha Atubiga for some more updates on what is happening on the stock market. So what is really happening, Bertha? Why are the stocks not performing that well?
Okay, thank you very much, Daryl. One thing is that the stock market and the currency market are not directly related, let me put it that way. And we don't really have a very significant impact on the stock market when the local currency is not doing so well. And one other thing is that it affects particular listed equities on the stock exchange. But in general, the Ghana Stock Exchange has not done so well this year, especially. Last year it didn't do well. This year it continues to record negative returns. And I would say that the cedi, when you look at the performance of the cedi currently on the interbank market and even on the normal market, the forex, the black market, you realize that the value of the cedi is not very strong against the major trading currencies, especially the dollar. Well, we've closed our eyes so much to the other currencies, but the cedi is not doing well against the euro and the pound as well. And that is also affecting the market in general, but the direct impact on the stock market is not significant. It has some impact on some selected equities on the stock market.
Okay, Bertha, do clarify this for us tonight. So we understand that the foreign investors are leaving the local bond market, and that is having an impact on the stock market's performance. And now the reason why the foreign investors are leaving the local bond market is because of the city's performance. Is that what it is?
Well, exactly, because, you know, and the stock market, well, the performance of the Ghana Stock Exchange now is largely due to the demand and supply of equities and what is happening in the financial sector. With the currency, we know a chunk of investors on the stock market are foreign investors. And these people are not locals that will say they will, the profits that are made or the gains that are made or are going to stay back in the country. Definitely they are taking it out. And one thing that we've also observed in the last 2 weeks on the stock exchange is that we haven't seen bulk trades on the exchange. Usually when we have bulk trades going on, then it's mostly done for these foreign investors, but we haven't seen that in the last 2 weeks on the stock market, as in seeing very significant trades going on the Ghana Stock Exchange. And that is mostly done on behalf of the foreign investors, but we haven't seen that. The market has generally been very, very low and very slow. The only equities that have been very active, you can say, is ETI and MTN. And today we had some trades going on in GCB.
And we are told that it's gone down by as much as 14% for the first quarter of this year. Now, I want to find out what that signifies. What would that what would be the
Well,
impact, rather?
one thing is that when an investor is coming into any African market, or when they're looking at any African market to invest, one of the things that they look out for is the average performance of the market. So if you're comparing the average performance now of the Ghana Stock Exchange, which is a negative, against other African markets, you can see the Ghana Stock Exchange is among the worst performing exchanges in Africa currently. Because anything at all could happen, and there could be a turnaround. And most African countries, I would say, are not also doing so well. Some African countries are also recording negative yields in terms of the average returns. That's the average index or the benchmark indices on these African markets. But Ghana Stock Exchange is one of the worst performing markets currently in Africa.
Okay. Just a quick one. Based on your experience as a stock market researcher, do you think that we are going to get out of the woods because we are told that these kinds of things are seasonal?
Well, it is seasonal when you know the market, the general economic, the market in general is also okay, or the microeconomic indicators are fine, and the economy is moving at its normal pace. But in a situation where the economy is not actually in a good shape, especially the financial industry, the financial sector, and that's going to take a lot of time for us to actually come out of it. I mean, our regulators have stated clearly, the finance minister has stated clearly, they stated that these are temporal issues, but especially with the CD and all that, we need to be able to come up with a permanent solution. Though most countries practice this, pumping in dollars when there's shortage and all that. But looking at what is happening in the financial sector, it will be very difficult to say that we're going to come out of these challenges anytime soon.
That doesn't sound positive, Bertha. But anyway, thanks for your time tonight.
Thanks for confidence in the market is down, so that's going to affect the entire market.
I get it. I understand. Thanks very much, Bertha, for the insight you've given us tonight. So we had the finance minister also talk about the fact that, well, if foreign investors are leaving the local bond market, it is good for the economy. Let's subject that to some analysis as well. Joining us on the line is economist Professor John Gache. Your thoughts first on what the finance minister has been saying.
Hello.
Yes, sir. Thanks for your time tonight.
Thank you.
So is it actually good for us that foreign investors are exiting the local bond market? Is it good for the economy?
Well, definitely no.
But the finance minister seems to think it is.
That they are leaving?
Yeah.
Well, the point is they are leaving because of a problem they are encountering. The same finance minister was very happy because there was oversubscription of bonds, and these bonds are largely subscribed to by foreigners. So I'm wondering why the same finance minister will be happy that the foreign investors are leaving the bond market. And they are leaving the bond market because they have some kind of low confidence, and they anticipate the effect of the depreciation on the repatriation of their investment. That is why they are leaving. And the signal is sent out is negative. So I'm wondering why within 1 week a finance minister will go and raise money from foreigners, and at the same time will declare that he's happy because foreigners are leaving the market.
What would be the repercussions? Already we have seen that it is affecting stock market performance.
Hello?
Yes, I was asking what would be the repercussions as we have already started seeing the impact on the stock market.
Well, I think you have a huge effect. Number one, we need to know why they are leaving. Is it because they have exhausted their call period? What I mean is that they have actually stayed with us within a short period of time, and they have decided to exit our market and getting their good return for it. If not, so there is going to be created some hope.
Well, we are made to understand it's because of the wobbly CD, the performance of the CD right now.
So what it means is that it doesn't encourage the general investment environment in the interest of government and in the interest of the markets which are affected. Even though the foreign currency depreciation or the depreciation of the city does not directly affect the stock market, but it affects investors, especially when they take decisions to move their funds out of the country. So if it becomes very costly for investors to move their funds out of their country or your country, then it is better they go and invest in another market. And then that is the effect that is having on us.
Okay, I'm going to ask you one final question before we allow you to go. As we talk about the cedi's performance, in fact, we have been asking our viewers on our Joy Business poll whether or not government has taken pragmatic steps enough to fix the challenges with the cedi. Yesterday, we had the finance minister suggest a bipartisan committee to probe or investigate the challenges with the cedi. Is that good enough?
I think I would like to look at how the market interprets that statement. And the interpretation of the market would determine the action of market players. And we are seeing some already. The interpretation of that on the back of the fact that the minister already indicated that the cedi is performing better than in the past. Then at the end of his statement, he's calling for bipartisan. The market will interpret that there are some underlying chaos going on that the minister doesn't want to openly say to the public. And that is why he's calling for bipartisan approach to actually bring some kind of confidence into the market. So that is the position I want to take in terms of the interpretation by the market. Of course, there is no need for a bipartisan approach because the fundamental issues to be dealt with regarding the currency are known to us. If you take our international trade statistics, it is very clear to us what is going on in terms of the structure of our economy. Policies must be put in place to address that. And I do not think that it is now that you are going to tell me that when you are importing about $339 million worth of rice into the country, you will need a bipartisan approach to know that from your own international trade statistics that you need to put in place policies to actually deal with that situation. So I think that if you see on your international trade statistics that you have now become net importer of palm oil, you don't need bipartisan approach to actually deal with this matter, which are very fundamental.
All right. Thanks very much for your time tonight, Professor John Gache. It's been very insightful speaking with you tonight. And so let's go to our poll. As I've been indicating, we've been asking you whether or not you think that enough pragmatic steps have been taken or are being taken to fix the cedi's free fall in value. And, well, it's a bit surprising the outcome of the poll, but it's early days yet because we commissioned it just a few minutes before we went on air. 54% of you say yes, you think that the government is taking enough pragmatic steps to fix the cedi's free fall, and 46% saying no. But of course, it's going to be based on the outcome. As we are watching on Bloomberg right now, the cedi is selling at 5 cedis 51 pesos to the dollar. Let's move away from the cedi and speak about developments in the banking sector, because bank deposits have risen significantly over the last few months following the banking sector reforms. Head of Banking Supervision at the Bank of Ghana, Osei JC, says there have also been an improvement in customer confidence among traders who believe banks are capable of holding their funds safely. According to him, the outlook of the banking sector is positive, and the central bank is committed to fully implementing all rules and regulations which will ensure a more vibrant financial system.
Bank of Ghana carried out reforms in the banking sector last year, which saw consolidation of some weaker banks and reducing the total number of banks from 33 to 23 strong banks in the country. Head of Banking Supervision, Osei JC, disclosed that banks' deposits have begun picking up strongly after the reforms. According to him, the outlook of the banking sector is positive, and the central bank is committed to fully implementing all rules and regulations, which will ensure a more vibrant financial system.
And they will meet all regulatory and prudential requirements. And from where we sit, we have seen a significant improvement in the liquidity positions of banks. It's one of the results, the fallout of the reforms that we have implemented so far, Mr. Chairman. Available returns that we have received recently indicate that bank deposits are growing. Why are the deposits growing at a time when people were moving out? It's a matter of confidence. It means people have now bought into the reforms that have been implemented so far.
Osei JC was speaking at the CEO's breakfast meeting by the Ghana Investment Promotion Center in collaboration with Joy Business. Chief Executive of the GIPC, Yofi Grant, commended efforts by the central bank to strengthen the banking sector.
Happy to say the Bank of Ghana has wrestled this problem to clean out the banking sector and consolidate such that you can have a stable, reliable financial system because we're actually heading for collapse, as I understand it. So we applaud them and we recognize that, as Mr. Sean Latte said, we need finance to oil the engines of private sector and business.
The theme for the event was Ghana's banking sector reforms, opportunities for private sector. Former president of the Association of Ghana Industries, James Asarieje, on his part, appealed to banks to lend more funds to the private sector, especially to indigenous businesses.
Then it is expected that these banks will now have a lot more money to lend. But that is not what industry is saying, because we see that when it comes to especially indigenous businesses, there's a lot more squeeze on credit than before. So industry expects that banks are to open up to support indigenous Ghanaian businesses, particularly in manufacturing and other productive sectors of the economy.
The forum was part of initiatives by the GIPC to attract investors into the economy and also to help meet its target of $10 billion investment by the end of the year.
In other news tonight, local energy company Strategic Security Systems, through its subsidiary Strategic Power Solutions, has signed an agreement with the U.S. firm American Energy Group International to produce solar energy. The two organizations will build small-scale solar power systems that will run on photovoltaic panels assembled in Ghana, but using U.S. inverters, batteries, and equipment. The project is expected to benefit 6 dioceses of the Catholic Church of Ghana. U.S. trade development agencies providing financial support to carry out feasibility studies for the project. There's more in this report.
The beneficiary institutions include 28 health facilities and 310 schools, among others, within the 6 dioceses of the Greater Accra, Techiman, Keta Akachi, Kufuridua, Kumasi, and Tamale. Partners in the project believe solar energy is cost-effective and will remain a reliable source in future. At the signing of the agreement at home here in the Greater Accra region, U.S. Ambassador to Ghana Stephanie Sullivan says both countries will benefit.
The second reason is that this is an excellent example of how companies in Ghana can increase local content and create jobs while engaging in smart international trade and solving issues critical to Ghana's long-term development, such as accessible, reliable, and affordable energy. The government of Ghana has made it a priority to move beyond aid and to increase industrialization, and this partnership supports those goals.
Group Chairman of Strategic Security Systems, Dr. Francis A. Boateng, says the project is in line with the company's vision.
We have always believed that solar energy is the way forward for Ghana, as we have been blessed with the sun in all abundance, as well as technology to harness energy from the sun. This project is not only an opportunity to show the world that Ghana and Africans in general have a vision for themselves, but also to show what mutually beneficial collaborations can and should look like.
Meanwhile, American Energy Group President Todd Skinner is happy the project will create.
All right, so that's actually good news to wrap up with. Thanks for watching Business Live. My name is Daryl Kwao. More news on our website, myjoyonline.com/business. There you go. We're back same time next week. Thanks for watching.
Beyond these diocese,